Always had a way to make it work and find another route. Always had a way to make it work and find another route. Always had a way to make it work and find another route. Always had a way to make it work and find another route. Yeah.
What is good? What is good for the culture family? So there's some things that I am not already ready for. Hold on. Let me get right real quick. Let me tighten it up so that we can go ahead and get started with today's session. My chat ain't up here, so that's what's holding me back right now. So I got to get the chat up so that y'all can get active on the chat. Copy. There we go. Interact. Oh, no, not interact. Properties. I don't even have to right click it. Learn from that. But what is good? What is good? Hope you guys are doing great. I had a solid morning. We got a good little workout in, little leg day workout in. Early bird, per usual. Just trying to get closer to the person that, I envision myself being, that I want to become. You feel me? Want to be great. Not just in this industry, but I want to be a great person. Leave a mark on not only this industry, of course, but just on the world, man. And that starts with doing the things that I need to do personally each day. And just seeing where that takes me. So let's hop into these markets. Let's go ahead and take a look here at the DXY, or not DXY. Let's look at EURUSD. So let's go to EU. Okay, so we got EU pulled up over here, and I'm looking at it. Let's take a look at the previous 4-hour candle. Previous 4-hour candle did in fact close bearish for EURUSD. This is a good sign that we can see a bearish continuation. You can see that with the start of this 4-hour candle, we already have gotten a retest that pushed up here to these highs, and we're getting an explosive move to the downside. So what are we looking for? We're looking for a potential continuation. What would a continuation be? It would be to break down the lows. Here, generally, what we would target is a break of the previous 4-hour candle low. You can see that this current 4-hour candle looks to be flipping as a bearish candle. We could see this 4-hour low get pushed into and potentially broken here. Today is, in fact, FOMC. I won't be able to trade FOMC live because the firms that I trade with do not allow said news to be traded, which is okay. We got to play within the confines of whatever the rules are. That's what we sign up for when we sign up for these funded accounts and funding challenges. It just is what it is. So what we're looking for is a continuation sell. So, all right, so let's dial it down to the smaller time frame. Where could we see an entry? Where could we possibly, see some signs of resistance? Where are we looking to get in at? All right, so price is creating lower lows and lower highs. One thing that I do that is going to be mentioned, and it could get sweet today with FOMC, right? I don't know if I said that we had NFP today, but we have FOMC if I had mistaked on that. So one thing we could see get swept today coming off of the previous daily. So we have to admit that the previous daily for EU did in fact close bullish, and the current daily has no top wick. Not to mention on the smaller time frame, we do have 3 gaps here. 1, 2, 3 that have yet to be filled here on the DXY, right? And so we know that on the DXY, if price goes up, that would cause pairs like EURUSD to do what? Go down. So this is the DXY. EU should actually be going up. We've been looking at the DXY this whole time. I thought this was, so EURUSD is going up. Excuse me for saying that the wrong way. The previous 4-hour did in fact close bearish. Current 4-hour has no bottom wick. Let's verify that it has no bottom wick here, because all right, so yeah, no bottom wick to be had on that 4-hour candle there. Looking at this, let me pull up Trade Locker here so that I have that up and running as well, so we can get my count up here. All right, now let's take a look at and what we see for EURUSD. Despite this 4-hour candle not having a bottom wick, we do see higher high, higher low getting created within this current wave. Now, it'll be interesting to note which area is going to get broken first. This high, which would consider this a continuation, or will we see this low get broken here, which would result in a change of character? So price is kind of in between structure right now. We see that the 4-hour candle is just beginning. Previous 4-hour candle did close bearish, no current bottom wick. So if we're looking at this on a strictly based on our 4-hour direction, because we know that the rule 3 in the For the Culture FX strategy is to identify the 4-hour direction. So as of right now, we should be looking for sell positions, which aligns with the thesis that this DXY is going to be bullish, because if the DXY is in fact bullish, that would cause EURUSD to go down, which is why we would likely have seen this previous 4-hour candle close bearish and no current bottom wick that can likely get filled. Now we have to understand what is price doing on the smaller time frame structure. You take a look on the 1-hour time frame. This is a perfect change of character that we have identified on the 1-hour time frame. Price is creating consistent higher highs and higher lows. You get this high created that was started by, that broke this high here, started by this move here, and then you get a push down to break that low. Now what would we expect, understanding that that is a change of character, is that we would want to see price retest this level and form a bearish signal off of that level for a continued move to the downside, likely to target and break this low here. So that is what we could be seeing in confluence with this current 4-hour candle tapping into this level, rejecting off of this level, and then closing bearish as an indication that price is struggling to break this high. Where we're at on the larger time frame, if you take a look here, we're at a key resistance level, and if we scaled it down, you'll see if we zoom out here, you'll see just where we're at. So we're at a level that, though price is in a overall time frame bullish market structure, if we zoom out, we are on the larger time frame for the past couple months. For the past, let's see if I can zoom out here. So you can see for the past couple months, I mean, really struggling on the larger time frame with this range that we've been in. You can see for this year, oh man, don't let us get some moves like this here, where we get trending markets like this on the daily time frame. Oh, we're gonna have a field day. You know, we get markets that start trending down like this, we are going to have a field day. And where have we been realistically? In a kind of a range bound scenario here. Every time price reaches the extreme highs, you get an immediate sell off. And when you get to these extreme lows, you also get a push back up. So within these range here is where price kind of has been sitting. So where are we at now? We're at the top of that range. So understanding that where we're at on the top of that range, and if we dial down to the smaller time frame, we go to the 4-hour time frame, you see that from the top of the range was up here. Let's go back again. So from the top of the range is where we seen our initial change of character, right? On the larger time frame. Price was creating, higher highs and higher lows. And technically within, if we remove our drawings here, I know I'm doing a lot of movement on the chart, but bear with me. I try to keep it steadier. So if we see within this wave, we had a high get created, a low, high, higher low, higher high. Then price pushed through, broke through this previous low here, and continued down to here, right? Price corrected up. As long as it doesn't break this high, it's still bearish. It corrected up, pushed up here into resistance, pushed back down, broke this low, right? So we're in a confirmed downtrend. We had the change of character, a retest, and then the solidified continuation of that trend. Now, where are we at now? This becomes our key high because this broke our previous low, and we're at that same resistance level on the larger time or on this, I guess, 4-hour time frame. Right there, where we seen yet again where we would expect a larger time frame flip, only because the fact that we've been creating lower lows and lower highs within this wave here. So you would anticipate something along the lines of a push down, push up, new push down, new push up, a continuation potentially down. Now, I'm not saying that price has to push all the way down here. We're not even going to be we would capitalize on that wave, but we don't want to just get that for a day. We're only looking for today. So if we zoom in on where we're at, so price taps into this level, right? What do we see happen on our smaller time frame within this zone here when price taps into this level? So you expect, since price is creating lower lows and lower highs, that when we get into this level, we would see a flip for a continuation down. What would be an indication of a flip? An indication of a flip would be a change of character, and a change of character would be if price stops creating higher highs and higher lows to create a new lower low. So you can see we had a high get created up here, a push down, a new high get created. This becomes now our key low, and then price push down, broke through this low it broke through this low, pushed back up into this demand zone, which is where we would expect a bearish move come from. Here, similar as on the larger time frame, we just dial it down and we do the same thing on the smaller time frame, understanding what that larger time frame direction is. And we have within this structure right here a move that is saying that we could potentially start a correction for a continuation down, potentially, potentially. Because what is price in overall? It's in a bullish wave right here. And on the larger time frame, we are on a bullish wave. You can see that we are still in a bullish wave. So what we would be looking for would technically be a corrective structure. Now, coming off of the previous daily for EU, the previous daily, in fact, did close bearish. So what high would I want to see broken? The previous daily high. So if the previous daily high isn't going to get broken, and at the previous daily's high is where we started to see our change of character, somewhere within this level, we could see a flip so that that daily high isn't broken and a continuation down following the previous bearish daily candle. Now, like I said, we have to respect that price is in an overall bullish structure. So if this area gets blown through, this high gets blown through, it's likely price could push up back into these highs here to potentially break this high, because this on a larger time frame is still in a bullish structure, right? We're creating higher highs and higher lows. Within this wave, we're in a bearish wave, and so we're looking for essentially a correction within this bearish wave, but price could break through these highs and continue pushing in the trend. And that's just the price that we pay. You know what I'm saying? This is a high probability trade in a high probability zone, a high probability area where we could see a potential rejection and a continuation down. What we want to see is some type of bearish move, whether it be a strong bearish move off of this level here. Even if price breaks this high, as long as it doesn't break the previous daily's high, we could still see a bearish move to the downside. Because what do we see happening with this wave here? It's creating higher highs and higher lows. Nothing yet realistically has indicated that price is ready to go down within this wave, and we have a lot of volume to the upside there. So these are all things that you have to take into account when you're looking for these trades. What would be a good sign that price does want to go down? Well, it would be a rejection of our 4-hour candle high, and then this flip either from this level where we're at currently, or even if we break this level and we tap into more or less, we would have to refine it. Let's go down to this 5-minute time frame, see if we can't refine our zone here. We say something along the lines of, at the very least, and I doubt that price would go to this refined level, but at the very least to up there is where we would want to see some type of strong rejection for the for EUR USD. So, and realistically, even looking at it on the 15, I really don't even think that price would go up there and flip off of that level depending on how much volume it has. I think we're more likely to tap into this resistance based on that 15, where we would expect more of a rejection off of. Because you can see how price tapped into this range here, rejected every time it tapped into this range, closed bearish, and then pushed down. That push initially from this level is the start that broke the previous low, which is why we're looking for sales in the first place, because that is what caused this change of character here, and then off of this level we got a previous 4-hour candle closed bearish. And what we see it is in terms of volume. You got to look at it in terms of volume. Where is there more volume? We have 3 candles that push down, though just a correction, because this essentially is just all of that we're seeing here. Any bearish wave from here is just a correction for a potential move to retest here and then continue pushing in direction of the trend. You know, that's what we essentially see happening. This larger time frame, and I know I'm jumping away back and forth here, though it's in this bearish wave, we know that on a larger time frame, price is creating higher highs and higher lows, and at some point these highs are going to get broken. And the trade that you essentially lose is the change of character trade. When price says that no, we're not respecting off of this level, we're going to change the whole direction and continue pushing up. That's similar of what we seen happen yesterday on gold, which is why I'm not going to say which is why we lost the trade that we lost, but we took a trade, ended up being a losing trade. But if we look at it here, was it a losing trade as in it didn't abide by the system, or was it a losing trade because there was a change of the market direction? And that's what we seen happen yesterday on a smaller time frame here. So you can see within this area, price is creating and hindsight is 2020. So we're gonna go to this right here. Where was it that we took our entry? Oh, okay. All right. So we had 30 minutes. I need 2 candles. 1 15-minute, 8:45, next 15-minute. That right there. All right, so we come into our session. Our previous 4-hour candle had closed bearish, if I'm not mistaken. Yeah, so we had just closed bearish. Let's go back to the 15-minute time frame. And on the 15-minute time frame, price is creating lower lows and lower highs. So we had this low get created. It broke through this high, but then broke through this low, invalidating that price was forming a change of character and that the structure remains bearish. This will be considered now a liquidity grab, a grab of liquidity above these highs for price to continue pushing down to the lows. So what did we see happen? A correction and then a break of that low. So when we corrected back up to this area, we wanted to see a bearish move from this level. And let me refine it down to the smaller time frame. More specifically, I believe it was this level that I wanted to see a bearish move from. And let me see. I gotta go back to my trade time so I can see the actual position that I took when I entered the position and when I exited the position. Okay, the time on this is not right. I know it's not 16:45 when I took the entry, so this got to be equated for or accounted for a different time zone, which I wonder if I can change that. One click trading, chart panel, show asking price. No, how do I change the time zone on here? What is this? I don't even know what that did. Okay, that ain't it. That's there. Okay, it just controls all this stuff. So I'm not sure how to figure out the time right, but let's see. Maybe I could do it. It's probably like 9:45. So what is this? 9:20. Nah, it was at least 9:45. So price began to push down, right? Oh, okay. This is where I took my entry. All right, so this is what we see. I wanted to see price come to this area, retested this area. We started to get a bearish move to the downside. We got on the smaller time frame a change of character. So when we got the change of character and it looks like this here, price was creating higher highs and higher lows, tapped into that level, started creating lower lows and lower highs. I wanted to see a retest. I believe it was here, where it stops above this high is where I think I set my stop loss, if I'm not mistaken. And I think hold on, let me see where's my entry at. Yeah, so I got in here. Well, it stops above this high, if I'm not mistaken. Let me see. Stop loss 25.79. Is that 25.79? Yeah, stop loss was 25.79.16. So 25.79.16. Right here. Boom. Skadoosh. For this continuation, for a move to the downside. Now, the larger time frame was showing signs that price could go down. We seen the 15-minute time frame was creating lower lows and lower highs. And then we got this good, what I thought was a good rejection off of this area to be able to make a steeper move to the downside. So you click through it, price began to push up. We were really floating a little bit, and then we started to see moves like this. Now, when price got to, when did I exit? 25.78. So when price was pushing up with volume in this area and it had broke, this is what I waited for. I wanted to wait for a break of this high here. If price broke this high, it was likely that we have enough volume to go break my stop loss high, and that this would likely just be a change of character, you know? And what happened? So after it broke that high, I went ahead and took my position, or closed my position, shall I say, and then it would have got stopped out. And then what do we see happen? Price made another move to the downside, but then it did break that larger time frame on the 15-minute time frame high. So all that essentially was a change of character. Now, what would solidify that this was a change of character and that price is ready to go up? Well, it would come down potentially to these lows, and it would reject off of these lows. If it does not reject off of these lows here, then we know that this was just a liquidity grab to grab the liquidity above these highs. It's just something that market makers generally do, and you can protect yourself by trading on larger time frames generally, or for instance this move here. Excuse me. It's just an unfortunate circumstance, you know what I'm saying? It happens. It doesn't happen often, but when we identify that something like that can happen and invalidate our trade, it's good to be able to take profits, or to, you know, with close the trade early instead of taking the full, you know, drawdown in that case scenario. Now, there have been times where I've done that, and then price right after I close will run right in profits. So it's give and take. It's all about more so what you want to do. And for me, protecting the back end rather than hoping for a reversal or a flip or something like that. If the structure breaks my high, you know, it's just invalidated at that point. And now it's just, how can I protect myself, or not protect myself from loss, but manage the loss that is going to incur to where it could be smaller than what we anticipate, you know. So that's what that comes down to from there. So for yesterday, it wasn't a bad trade, and you can see after the liquidity grab, like, let's go to like the 30-minute time frame. After the liquidity grab, of course, price goes down and pushes all the way through the targets that we were looking for, and, you know, well after our session time, or, well, no, we got off on the session at like 10 o'clock. So soon as we get off the session, price does that liquidity grab. By the time 10:15 comes around, price is starting that move to the downside to that area we were looking for. And that previous 4-hour candle still had, like, because this was the 4-hour candle before. So what we wanted to see was a correction back up, not to break that 4-hour high essentially, and then to get in on our area, and then to see this wick get filled. That was the whole idea and thesis behind the trade. And so it's just unfortunate, you know, that the liquidity grab happens, and, you know, we was able to protect ourselves, and we lost less than, I think I only lost, I would put $1,000 at 1% at risk, and I only lost, let's see, 3, 5, so like 0.8%. You know, after fees. So yeah, so like 0.8%. So was able to make the loss smaller than what I even was risking, being that the setup had got invalidated, and it was a liquidity grab for a continuation down. It just is what it is. All right, so let's go to where we're at now. Same thing with this. You see price is pushing up with so much volume here, right? And though we're in, like I said, that larger time frame bearish structure, if price has volume like this and are making these impulsive moves, it's hard to, within session, to correct these moves unless you have some type of news or something that comes out that can give you a spike in one direction, liquidity grab, and then that change of character down to the downside, or that continuation down to the downside. But as of right now, price is just remains in this bullish structure on this smaller time frame. And we know that that's what we look to capitalize on. This is our previous 4-hour high. Anywhere above this high within this range here, price still is liable to flip off of. So a bearish candle to close within this area, though we do have this volume, which would be, since we do have this volume that we see happening here, if I look to take this trade, it would be at a reduced risk. and just look for a continuation or a break of the previous 4-hour low, which would be these lows here, and a steeper move essentially to fill these gaps to the larger time frame resistance. But if price pushes up, you know, we don't see that confirmation, we can't execute on that. And how I would want to see it reject is, I think there's, let me see, did gold do it? I would want to see a candle kind of like this candle here to close how this candle closed. Let me see. At that resistance, showing a strong rejection off of the level for a continued move to the downside. That or a, let me see, one of our doji reversal candles. Something kind of like this, essentially. That's what I want to see. That's what would give me the most confidence to execute on this trade, being that we do have the volume that we're seeing to the bullish in the bullish direction. I'm on my laptop, which is why this is like I'm having to adjust this thing so much. But if price continues to push up with the volume like this, and we start to see these higher highs and higher lows get broken, it's 931. Because essentially within this range is a tradable range here. We have bullish volume. Currently we are bullish. If we've seen a correction from where we're at immediately, before pushing steeper up into this area, and you get a bearish signal, this could likely be a continuation buy. But it goes against the previous 4-hour candle, which is not the best. All right, so let's see if we can get a market structure shift on this one. A market structure shift, I'd be willing to take a sell. We get a break of the low, correction back up, a bearish reaction off of there. I'll look for a continuation play, and then I'll set this trade to be something along the lines of this. Stop loss would be above here. Did this break this high? If this high is broken, this changes a little bit of the structure here. Let me see. Gotta zoom out so I can get them both, bro. Okay, hold on. How do I get this away? Oh, there we go. Yeah, I think it broke this high. Oh, wait. Let me see. Let me get it perfect. Is that perfect? Not quite. Dink. All right. Where are we at currently? Ooh, it came like smack dab to it. It didn't break it though. It did indeed not. Oh wait. Hold on. If we're gonna be perfect, we gotta be perfect. I'm pretty sure like at this point it doesn't even matter. Like this range that I'm in gotta be less than, it's not even, yeah, like a point. Yeah, it don't even show the data how close it is. So essentially this is a double top. That's what that is. It's just a double top. Okay, we can just do this. But what does a double top mean? It means that this is likely going to continue creating higher highs and higher lows and break this high up here. That's why it's important. That's why I wanted to see if this high was broken. It already shows that price could push up and break this high there. And again, this is like pennies on the dollar here. What I'm looking at is 2 pips. Like this is 2 pip range from here to here. So that the amount of difference between these. I'm pretty sure they're like probably smack dab on each other. Excuse me. I be saying that these 4 a.m. days are eventually going to catch up to me. But I feel like it's a good thing to be tired a little bit. If you're tired, that means you did either something right. That or, you haven't done nothing. And that can make you tired too by not doing nothing. Get tired of doing that. All right, so yeah, this is not necessarily the candle I want to see. It's likely that the previous 15-minute closed bullish. Yeah, so closed bullish above this resistance here. When you see the stuff like this, it's likely that you see a continuation of that bullish volume. We could see a correction, but we had a shallow break. I don't think that this current 5-minute or 15-minute candle, even if this current 15-minute candle closed bearish, it would close as a weak bearish candle, and then we would likely see like the next two 15-minute candles begin to push down to correct this. I think it's more probable that we see the 15-minute flip and a continuation, being that we had already closed above this high here. And I guess there was a point in time where I used to trade breakouts. So when you trade certain strategies, you start to understand certain things about the strategy, good and bad, if you document your trades. If you just take trades blindly and just take trades on feeling, then that you're in a whole different ballpark. But if you when you trade a strategy and you specifically trade that strategy, you start to see the flaws in the not just the flaws, but you learn things from it, right? So how did the strategy develop? What was the problem with trading breakouts? Why did I stop trading breakouts? Is because breakouts, and so how it will work is just how we just closed above this area here. I will wait for price to push down and then likely get in. It wasn't even a specific area I would get in at. It would just be I would want to get in on the bottom wick of the next, let's say, 15-minute candle. So this would be the bottom wick of this 15-minute candle. I think I would set my stops below the low of the previous candle that did the breakout. Take my entry, set my target to whatever the resistance was. What was the problems with the trade? Well, it just so happens that when price pushes up to an area, you feel me, and you get a breakout essentially. Two things. One, you get okay, for instance, we're going to break down my strategy, my previous strategy, and knock out some of the flaws within the strategy. And what I would have taken and why what was consistent. So one thing that I noticed that was consistent is I would take trades. My average trade was about a 1-to-1 risk to reward, which with this system that we use, if we close properly, it's generally like a 1-to-2, 1-to-3 is more so of the average. It's just depending on if you're getting a continuation trade or, how big that first candle is. It varies, but let's say on average it's about a 1-to-3. It's more so consistent with the trades. When we're in a probable session, that neither here nor there. So we broke this high here. This would be the thing. So my two problems that I would have with my trades, they will only go at max 1-to-1, and this is at max. You know what I'm saying? So my max profit potential was generally a 1-to-1, and that was consistent. It was very, very rare. We would have to get a lot of volume for it to go to a 1-to-2 risk to reward. And so let's say, for instance, this candle closed as a bullish candle. Now, normally I wouldn't have taken an entry if the bullish candle that broke out didn't have a top wick, but let's just say, for instance, that this did have a top wick. I would get in on the next 15-minute candle as the bottom wick is being formed, right? So here, boom, as that bottom wick is being formed, I'm getting in, right? I get in long position. Looking to go long, I set my stops below here. This was also a big problem, setting the stops below the candle. That's how it worked. The candle that broke out says stops below. Look for a continuation of the volume. Let's say this trade would have been a 1-to-2 risk to reward. Now, what would it be? It would go up. Sometimes generally speaking, on average, right after a breakout, one or two things will happen. So we would get something like this, and we could say that this would be an early move. We would get some type of volume, and then I would move stops to break even. Every single trade, it didn't matter if it ran up here or if it was where it's at now. So let's just say it pushed all the way up here but didn't go to my target yet. It would correct right to my break even, just right to the break even, and then continue pushing up like every single trade. And it was like most every single trade, I would say, did that one thing. And I just, for the life of me, it would just happen over and over and over and over again. And for the life of me, I couldn't figure out a way around it. It's like I get in, and every time I get in, it stops me out at break even. That, or it would hit stop loss. So it would go through whatever this candle's low is, and then go through there, come down here, and then push up to my target. And it's like, dang, I got the direction right, you know what I'm saying, but I can't capitalize on the move. And this was consistent. When I say it was happening over and over and over again, I was like, okay, something needs to be changed. And so what did I start to understand? Well, when you have structure and you create a new high, price generally pulls back down after the new high is created to that retest the supply and demand zone, right? So I was trading that. So then I'm like, oh, after I started noticing this, I'm like, wait a minute. Not only do these trades give me, hold on, let's dial it down here. So this 1 minute candle would have been the entry location if we were looking to take this buy, right? We would set stops, let's say below this low. Or you can set your stops below the previous low. Generally, I go at the low of the candle, or the lower high of the candle that I do, depending on how close they are. If they're far away, like how these are, in terms of like it would drastically change your risk to reward on the trade, I'll just go under the low, because it's likely it shouldn't break this area anyway. Similar to the trade that I took yesterday, it had broke my entry level even though I had it set below a low. When it broke my entry level, I knew it was invalid because it shouldn't have broken that level for if it was going to push up initially. So, and then we seen a change of character happen. We was able to protect myself. That's why I was able to do that. You only learn these things as you put more and more reps into the markets. You start to see certain things. If you are looking out for it, you know, if you're taking trades blindly, then you're not going to learn from them. But if you reflect on your trades and you start to see like, bro, what is happening? What's going on? You have your journal, you document your trades. You'll start to understand and learn, why am I losing? And you'll start to see patterns. And it just, trading comes down to being able to work around that, you know, that information that you have. That's how you grow in this industry. You have to work around the information. Just in the past 3 weeks, we've grown. There's been trades that I didn't take week 1 that I took week 2 that we made us, you know, profit, that we had missed week 1. It's not that I didn't take, but we had missed week 1 waiting for an area. And there was a lot of missed trades, and I'm not perfect in my execution. We're at like, I want to say 20% of our profit potential from the past 2 weeks. So far off from our profit potential. Only one real L, or 2 real L's. We took 2 L's this week. So not really starting off the week right. But I had 2 trades this week that went to full take profit that I moved stop loss to break even too early. So Sunday night, it was a goal setup that I sent to the VIP members. I moved stops prematurely, and I even told everybody like, hey, I moved my stops prematurely. It's likely, and got taken out at break even. It's likely that price is still going to go push to our target. And it, within the next 5 minutes, push to our target, which was about a 1 to 2.5 risk to reward. So there was that, which would have protected us. And then Monday morning, the first trade we took on Monday morning, it did go to a full take profit, but again, move stops loss to break even too fast, taken out at break even, and then scaled into another trade that just it wasn't a bad trade, but price had invalidated it by breaking through a high and changing this structure. Which how I managed that trade was poorly, because I was supposed to scale in at a 0.5% risk, and I took it at a 1%. So I took the full 1% L. So different things of that, you start to learn and you grow off of. So I was looking when I was trading the breakout. I was like, all right, so I'm gonna start taking my trade as soon as price gets to this level here, and I would set my stop loss below the low. And at this point, I was setting limits. So it was like I would set a limit like this, and on average, I would have about a 1 to 4 risk to reward trade, being that I set the limits and then set my stop loss below. The only thing that I found that was a problem with that is that there will be times where price would go to that level and just push all the way through, push directly through that level, And so I was like, okay, there needs to be, and then I started to notice, like, all right, how can I protect myself against when price just pushes all the way through? Then that's when the confirmation candle started to develop. And then once that happened, it's been pretty much wraps from there, because that was like, and don't get me wrong, there, as far as execution of the strategy, I have to do more to improve, you know what I mean? I don't think I'm executing at my full potential. I'm working towards executing at my full potential, but I don't think that I'm there. I think that there's more that we can do. I think that there's more profits that we can make. I think there's more discipline that can be had. The structure looks super goofy right now for EURUSD. I wanted to tap back in. Let's see, 5 minute for gold closed bearish. So, and we gotta remember, I believe the previous no. Scratch that. Previous 4 hour for gold closed bullish. The previous 4 hour for EU closed bearish. And look at that. They're doing the polar opposites of what each of their previous 4 hour candles closed. EU is ripping to the upside here. Though in a bullish market structure, we're going to likely be looking for, what is this going on here? This 15-minute candle. Oh no, this 30-minute candle. That previous 15-minute candle did close bearish, but it didn't close as like the liquidity grab type candle. How I see this is price pushed up, it pushed down, corrected to this level, couldn't push through this level. We could still see this wick get filled to the downside here. I just think that this will be more likely of a corrective structure, rather than a push to the downside. I think this is a correction because we just broke this high, or we created some, we have resistance at this high, shall I say. I think it'll likely break that high. But I don't see any real scalable entries. Let's see, that we would be able to actually take, because you can see what price created this high up here, came back down, broke through this high. It was the start of the push that created this high here that broke this previous high, came back down to this level there, this one, and then we see now what appears to be a continuation. If we could dial it down to the smaller time frame, this would have been creating lower lows and lower highs within this wave, and then we would have just seen that get broken. So you see a corrective structure and a continuation potentially. And then what is we see on the larger time frame? Well, all this volume from that previous 15-minute candle. Current 30-minute candle is bearish as of now, but this 30-minute candle can still break and flip to this high. That's what we would see from this current 15-minute candle. So this current 15-minute candle is going to determine how EURUSD closes. Is this just going to be a short-term corrective structure and we get a continued bullish push, or we're going to see a wick fill to the downside, we get a strong 30-minute closure, with not necessarily a liquidity grab. It's still likely that price flips and goes bullish, but what we would see from the next 30-minute is a steeper move to the downside, likely to break the previous 30-minute low. And then from there, it depends on what the structure is showing, What's good, my boy? What's good? Can't wait to have you back on the charts, my boy. We start getting these group live sessions going. That'll be fun. I think that's what, to get the community really right, I think that's what it'll be, what would be dope. Just to be able to get on, let's say like everybody not everybody in the community, but a lot of people in the community, we get like, let's say we do 10 people or not 10 people. We can have hundreds of people, but we take 10 people and we allow them to show their charts, and we can talk through, what they looking at from their eyes, things that we can maybe identify, maybe areas. It would be a vulnerable session. You would have to be comfortable with being vulnerable in your trading, but I mean, at the end of the day, how bad do you want to succeed? You could sit here in front of people and say, hey, look, I've been struggling with this, and you could feel some type of way about it, or you can, say, hey, look, I want to succeed, and this is what I've been struggling with, and utilize that value from that. So it would be dope to have sessions where we could, get on. I share my ideas, trades, and improvements that I need to do, because like I said, I'm not perfect too. I'm executing not to perfection, but better, better and better each day. You know what I'm saying? So that's what we're striving for, and that's what I want for the community. And then to be active, so that we can start to know people's names and faces, and start to really build the community long term. A lot of things that I have planned short term, but long term, that's what we're thinking. So okay, so look at this. So we did in fact get this wick filled to the downside from this current 15-minute candle, and we are starting to see some volume here coming off of this area, which doubles as, because as long as this high up here isn't broken, we are still bearish within this area, because this is where we have our change of character. Price pushed up, created a high that broke the previous high, pushed down, broke through all of these lows. That's our change of character. This is our resistance level. That's a good sign for price to potentially push to the downside from this current level here. What would be an even greater sign is a solidification that this bullish wave within this bearish, because it's essentially a correction, I guess you could say it would be considered, following our change of character. So we get our change of character, then you get a correction, and then you would want to see a continued move to the downside, essentially breaking this low. So what has to happen for this low to get broken? Well, before that low gets broken, this low has to get broken, and this would be a great sign if price could break this low here, and then potentially do a retest of this level for now a continued move to the downside. I would be much more inclined on selling that there, so that I know, because otherwise, even if we took this position up here, a sell position from this level here, we would have to take our trade or see how price reacts from this excuse me, let's say it was like something along the lines of this. We would have to see how price reacts at this area, because essentially that's our key higher low within this bearish or this bullish corrective structure. You know what I'm saying? But in terms of a flip here, that would be great. Did the previous 4-hour high get broken? No, it didn't. Well, we could probably see it better on here. Man, I think they were just literally neck and neck. And what I call this is a double candle wick rejection, which is just because back then when I was trading breakouts, these are things that you start to identify. When we got these double candle wick rejections, though it would still likely go grab liquidity at some point in time, it was a mark of a correction to be had. And I guess that can be identified by this bearish candle and then the wick fill that we did end up getting. So, but just as easily, price could have pushed into this level here, not broken this wick's low, and then pushed up. And that's the difference between it filling this wick and getting the volume that we see now, because now we don't have an immediate level of resistance. This is clean price action that price can push down into. Our next level of resistance, I mean, realistically, is route. I mean, we could say we have resistance here, but the candle didn't close. We say about right here. And then ultimately knowing that this is our retest candle within this bullish correction. Though the larger time frame is to the downside, this smaller time frame is still showing signs that, hey, we're in a bullish market structure currently. And as far as where we would look to take our entry, a shift would be a great sign that price wants to push down, push up. It's a good sign here that we can get this previous 4-hour candle wick fill, and then a breakdown below this low. Essentially, all I want to see is this previous or this low get broken down here, which would be, go back to it, solidify that this change of character shift was actually indeed valid, and that we could see price push down to resistance. Because what do we see happen here? There is really no resistance within this area that price is rejecting off of, you know? No immediate resistance. The next level of resistance is down here, you know? So we have, it's likely that price, since we've seen this shift, we're at that larger time frame resistance based on the daily time frame. You gotta understand all the moving pieces. It's like a machine. The market is like a machine, and it has a ton of moving pieces. And the problem with it is that this is how they come. They come stock. Your charts come stock. They don't even have all of these up there. I had to favorite all of these, but they come stock. And so if you're playing with a blank canvas and you just see, and a lot of people just buy highs and lows, you know, and it comes with experience, you know. The more time and effort, I mean, you got to figure I've been doing this for 4 years now, and still I feel like I'm just now really getting the groove of everything. Like, I'm not gonna say just now, don't get me wrong, I've seen success trading, you know, but now I start to feel more like, okay, understanding of the markets, and not just, I want to say all the moving pieces. And I don't feel that I have all the answers, don't get me wrong, but I think I understand, and I'm sure I understand, I know I understand majority of the moving pieces that move this market, how it moves, when it moves. I can spot different candles that can show signs of reversal. I know that if this happens, then this happens, because I've spent time, lots and lots of time, just on the charts, watching, learning, losing, winning too, but you don't really learn from your wins. You just try to replicate them. You know, you just try to replicate what are the things that we did right, what went right for this trade, why, and how can we replicate that. So essentially, you don't really learn. I mean, you do learn from them in that sense, but you really remember the losses and what not to do's. The what not to do's. It's so easy to not do what you're supposed to do in the markets, because it could just be a spur of emotion. Oh, let me get in a trade real quick, and it'd be just like that you know, you take a loss. Or for instance, there's been times where I gotten in on a position size, and I'm sure some can relate. I've gotten in on a position size that was a little heftier than I thought it was, and it's like, you know what, let me just hold it, let me not modify this position, let me hold it and see if this is going to be a big winner, you know. And it wound up being a big loser. You know, so these are things that you like, oh, I just can't do this. No, forget that. I take something at the wrong risk. I cannot let there take a bigger loss than what I should have lost for the hopes of winning big. It's always defensive battle in the markets. The offensive are going to come if we play our defensive right. Our opportunities are going to come, but it's like when the opportunities come, it doesn't matter if we took 7 trades that didn't abide by the rules. This one trade isn't going to make up for all those. And then you build bad habits. The more you repeat 1% errors, the more it compounds. The more you repeat 1% good habits, the more it compounds. It talks about it in Atomic Habits. Just doing, like, for instance, let's talk about it. These sessions are more than just trading. This is life development. You feel me? This is bigger than trading. That's why I love trading, because it makes you develop. It's called the aggregation. Page 1. Highlight it. Highlighted on page 1, and I got it on a note up here. It says the aggregation of marginal gains, which is the philosophy of searching for a tiny margin of improvement in everything you do. This is why I said we just got to get 1% better a day. If you just do something that makes you better today, that is going to propel you into the person you want to become tomorrow, then you won. You won the day. You can go to sleep tonight and be like, yeah, I won the day. And then you can reflect on it like, hey, could I have gone harder? Is there more things that I could have done? All right, let's do that tomorrow. You know, those things that I could have done. Let's go a little bit harder tomorrow. Let's get a little bit better than we were And that's, if you come do that over periods, it compounds. So it says highlighted, because I got it all highlighted here. It says, as hundreds of small improvements accumulated, results came faster than anyone could have imagined. The results of small improvements accumulated will give you results faster than you could even imagine. I'm telling you, that's how this works. This game, this life, man, one day it's like you're down, you could be down, and then in a matter of a month, 2 months, your whole life changes. It can be just like that. You could be work, no improvement. Work, no improvement. Work, no improvement. Work, no improvement. Then you see a little improvement and boom, success. And then it looks like you're overnight success because it happened so fast. It looks like it happened so fast. But realistically, it's just these marginal gains that you've been making that have compounded to now seeing an immense success. And Forex is an industry, or trading it is an industry, where you can do just that. You can lose for 2 years and then in the third year make over $100,000, or in the fourth year, third, fifth, sixth year of your journey, become a millionaire, things of that nature. And it'd be like, dang, it only took them 6 years to get 7, 8, 9, however many years it takes. It only took them that long to get to that through this skill. And then when you have it, you have it. For the rest, nobody can take it away. In order for you to lose this skill, something has to happen to your brain. God forbid. But you know what I'm saying? It's something off the wall would have to happen. So let's read further. Let's see. And reason why they noticed this aggregation of marginal gains is what his example is. The British cycling team. So they had been sucking since 1908. British riders had won. Since 1908, British riders had won just one single gold medal at the Olympic Games, and they had fared even worse in cycling's biggest race, the Tour de France. In 110 years, no British cyclist had ever won the event. In fact, the performance of the British riders had been so underwhelming that one of the top bike manufacturers in Europe refused to sell bikes to the team because they were afraid that it would hurt the sales if other professionals saw the Brits using their gear. So other brands didn't even want to mess with them. They don't even use our gear because people are going to think because y'all suck, our bikes suck, and we don't want that. You know what I'm saying? We're not even going to sell you the bikes. So this is what happened. It said Brailsford had been hired to put the British cycling on a new trajectory. What made him different from the previous coaches was his relentless commitment to a strategy that he referred to as the aggregations of marginal gain, which was a philosophy for searching for a tiny margin of improvement in everything you do. It said Brailsford said the whole principle came from the idea that if you broke down everything, I gotta take my notes off. Everything you could think of that goes into riding a bike and then improve it by 1%, you will get a significant increase when you put them all together. So Brailsford and his coaches began implementing in that, and it says highlighted as hundreds of the small improvements accumulated, results came faster than anyone could imagine. And then it says just 5 years after Bro took over, the cycling team dominated the road and track cycling events at the 2008 Olympic Games in Beijing, where they won an astounding 60% of the medals. So within 5 years, this guy who was just abiding by one strategy, which is the aggregation of marginal gains. And I know this isn't trading and this might not be interesting to everybody, but this is how we get better. I'm in the business of bettering myself and to better those that are around me. That's what this is about for me. So within 5 years, he took a program that at first bike companies didn't even want to give them the bikes to utilize, right? In 5 years, they were winning 60% of the gold medals at the next Olympic Games. So essentially 2 Olympic Games would have had to win by. But 5 years, that's all it took. And it was just by getting better a little bit in a certain area each single day. So what my pillars are that I feel like I need to do a little bit at least each day, I said there's 3 wins you want to do: a spiritual win, a physical win, and a business win. And then if you could also do some type of, learning outside of it being spiritual, that's also an improvement there. So if I can attack those areas in a single day, every day, and just get a little bit better in all those areas, I know that in the next 5, 10, 15 years that it'll accumulate to something much better than I expected, and results will come much faster than I expected. I've already experienced this with For the Culture FX. If you would have told me 2 years ago that For the Culture FX would have grown both as fast and have had as an impact as it had 2 years ago, of course not. I wouldn't have fathomed it. But it happened way faster. In a matter of 2 months, I went from 1,000 followers to over 15, 20,000 followers. 2 months. That's all it took. Well, look, literally 1 month. I did 30 days straight, January of 2022, 30 days straight of creating content, and it completely changed the trajectory of For the Culture FX. And since I haven't gotten in until now to creating content as consistently, slowed up on it, changed some things around to the strategy. A lot of people in the industry are a little shady, worked with some individuals who were more than shady. And so it was a lot of things that I still had to do some figuring out of being a person in this space with this type of impact, the things that I had to learn and grow through from that. So it took a toll on me initially, but now I have my footing with it. I understand the game. I understand that I want to change how the industry is viewed. I want to change how the people teach people how to trade. I don't want to sit here and teach you guys. That's not what I'm doing. I want to sit here and trade and learn, and you guys be here with me, and we all trade and learn, and we all learn and grow. Learn, capital L, or lowercase l, capital earn, and grow. You feel me? We'll just learn and grow. Lowercase l because we're not taking too many of those. Capital earn because that's what we doing big time. And then, we grow. So let's look at... Man, and I think the big volume for today is going to come following FOMC. So tomorrow, though, we should have a dime piece trade for New York session. And even tonight for Asian session, we should have some good trade following that NFP volume. Because whichever way NFP goes, or NFP, goodness gracious, FOMC, not NFP, FOMC. Wherever that FOMC volume flows is likely where we'll either be trading it or the correction of it or something of that nature, but it'll add an increase and an influx of volume into the markets, because realistically, what have we seen this week? Nothing realistically we've seen. I mean, Sunday was pretty, Monday, wait, what day is this? Yeah, so Monday, what is this? Sunday night? Yeah, overnight. So really, London session on Monday was the only time that really had any truly good volume. We've been ranging for the whole week, and you've seen that's also a reflection of, some of the losses we've taken, just because we've been in not necessarily the most ideal markets. You know what I'm saying? I would much rather trade when markets are pushing with volume like this than in a time where we're in this kind of corrective, slow and low phase where price is more so doing more of range. And this is where you'll see your liquidity grabs and things of that nature. Which is why I stopped trading gold for a while when we were stuck in this area. Price just could not break this high, and it was just struggling to break this high. And because of that, we started to see quite some sideways movement happen for gold, and trading range base is cool, but it wasn't, you would see that areas wouldn't be necessarily It was literally a range. You had to trade this range bound. So at the extreme highs and the extreme lows. And it didn't really abide by the system that we use because our system is more so for trending markets, right? It's not that we couldn't capitalize on gold. We capitalized on some gold position last week. That ended up going to the full take profit. I think it was Friday that we ended the week off with a banger, coming off that volume. Yeah, I think within here, price pushed up and created that high up there. We went ahead and got that price pushed up, pushed down, pushed back up here. We got that move to break that previous high. That was our trade. So we didn't really catch none of this super volume, but where market's at, we're in slow market times, guys. It's like we try to make something out of nothing, but if there's nothing, it's just nothing. You know what I mean? It's just what it is. So this gold structure though does look very nice in terms of where it's at for a continued bullish continuation. Because why do I say that? Well, you see prices creating higher highs and higher lows. We got a high, a low, new high, broke that high, key low, came back down to retest this key low, then it pushed to break that high. What do we see happen? Came back down to retest that key low. Let's take a look on this 5 minute. We can likely see. So we got to have the highlighted area here. 1 hour. That's the area. You go to the, let's say 15 minute. Nope, 15 minute. Would have missed it. 5 minutes, still kind of miss it. 1 minute, better, but let's say I think the 5 minutes is probably the cleanest. And more so, like as this 5 minute candle is beginning to close, we start to see it's probably like 1 minute left in the 5 minutes, looking pretty bullish. Entry here. A stops below the low. Looking for a potential continuation. Understanding that this could flip because we are in a corrective structure within this larger time frame move, which has been going to the downside. There we have been going to the downside. It's just that we got these highs and these lows created. We can see a push up. And where would the trade be invalidated at? Well, you would have to see how it reacts here. If price fails to break this high here, then it's likely that you just see this steeper move to the downside. Skadoosh, like that, right? And that's why you got to understand this, because why would that be? Because, well, price created a low here, a lower high. If it doesn't break this high and we get a bearish move, it's likely that you'll see a continuation of this wave. So different things, just being able to understand how to manage positions. That'd be an area where you would want to take a break even or move stops to break even or secure some profits, things of that nature. On these certain trades, let's take a look at EU. EU is it gonna let me delete it? EU is moving bearish off of that level there. So I don't think we'll sit here long enough to have time for this new low to get created. A new low, correction, and then a continuation. Price is in a bullish trend within this range. So maybe a corrective structure trade we could take. If price comes here, we look for price to go back up to the highs. If at the very least we can get a move to like right in this area and then potentially a move to the downside, that might be something we could scale in on. I just don't like necessarily trading against the direction of the previous 4-hour candle. But being that price has just been in this low and slow range, this is why when you're in a range like this and it's low and slow, I like to trade markets like this, where we get our 4-hour candle close above a high. It's likely that price continues with volume to push up, and we trade within this 4-hour candle for a continuation to break the 4-hour high. It's easy. Those are easy trades, right? We know those to be easy trades. It comes down to your test of might when you're in this range, or prices like how price was slow. We was able to execute on this range 2 weeks ago, though. Here got a little bit of these moves to the upside. I believe one within a smaller time frame here somewhere. I know I took a loss this day because I was looking for a continued move to the downside. Price was creating lower lows and lower highs, and I wanted to see this continue pushing to the downside, and we took a loss because we traded this candle here without realizing that this candle, this 4-hour candle, had closed bullish. and that we should have been in, and that on a smaller time frame we did have a change of character within this area, and then price came retested, closed. That's why it closed bullish, and then a continuation. So from 3 weeks ago, that was the only trade that we lost. From then we hadn't lost. On stream, took one L. During Asian session last week. Just one. Profitable the past 2 weeks. So this is the first week that we're down in the past, I guess you could say 2 weeks. Since the start of the month. This is the first week that we started off not on the hot streak. Down 1.6%. Not bad considering I risked a total of 2%. But not what we would want, you know. Especially with the opportunities that were left. That was left by that we didn't execute on to our full potential early on this week. The Sunday trade that would have ran 1 to 2 move stops to break even, and the Monday trade, the first Monday trade, which we took a break even on. Let me see if I can't pull this up. So that you guys can see what it is that I'm talking about here. So it's not just talk. Let's see if I can't pull this up. Is that gonna work? Okay, that didn't work. Give me 1 second. That ain't it. Oh, there we go. Okay. Why does it take up my full screen though? You guys gotta bear with me. Bear with me. Alright. There we go. I don't know why it did that. It transitioned it over without even me having it open. I don't know. Anyways, but you can see here. So first trade of the week was a went to full take profit, but got taken out at break even for a 1 to 2. I risked, I believe, 1,000 on that trade. Taking out at break even, should have made about a $2,000 profit. This trade here the next trade that we took. Okay, so the next trade that we took was another break-even trade. You can see that my actual P&L was $0. I moved stops to break-even, but took about $80 in fees, or $90 in fees. That is what it is, price to play the game. I should have moved my stops a little bit in profit, kind of like this one. Made it $24, only came out with $0, lost 87. I had a much bigger lot size on that trade. Both at 1% risk. Just two different assets, which is why fees was much higher on this one than this one, simply because not just the assets, but just the lot size that I took on the individual asset. And so then we see that Monday took that break-even trade, which should have also been a winner for a 1.5 risk to reward. So you figure we should have been up coming into the week, $3,500 coming into these L's that we took. Realistically, if I win this one, I don't take this one. So then this gets wiped out because I generally don't scale into a trade after I get a full take profit hit on one trade. That's the day, profit is already hard enough to come by. Why I ended off on a bad or sour note trying to get more. It's just I won the day, next task. There's other things that we got to get done in a day. So anyways, took the break-even trade, was like, all right, we're going to look at it for a scaling trade that should have been at a 0.5%. And at the time that I closed the trade, I believe it was at $700. And then it closed me out at $800. And then, I got $100 in fees. So ended up losing the full 1% that I had. Should have been at a 0.5. And then took a 0.5 and then took another scaling 0.5 looking for a whole 1%. Was able to modify that trade there. Took two trades yesterday on gold. Hold on. I know one was impulsive. was an impulsive move. Let me think. What's today? Today's the 18th, right? Oh, today is the day I got a request. Yeah. Let me see. Where am I looking at here? Okay, so yeah, it took 2 impulsive moves yesterday. One impulsive move. So this trade right here, let's see, 24.74. I remember that it just happened fast as I don't know what, 24.74. It had to have been within. Okay. I see. Okay. 24.74. I think it was this candle. 24.74. Yeah, spreads got me. But okay. So price was creating lower lows and lower highs. It had formed this rejection candle here. I like this as a rejection candle for a continued bearish move to the downside. And since I'm on such a small time frame, I got executed like right in what did it say it was? What did it say? It's 25.74.50. So I got executed at a much less ideal position, but price was like right here when we took the entry. And then set of stops above this high, I believe. Where did I get my stop loss was set? Oh, stop loss wasn't set. I took stop loss 24.95. 95. It had to have been within this candle because there's no way I waited for it to come back down. I just remember it happened really quick. It was like all of 2 seconds that I took the trade, and then it failed and had to close it. But because of spreads, I got out at 20. What did it say? I got out at 25.75.96. 25.75.96. Yeah, so once it had broke my entry candle high, it was invalid for me, you know. What I was looking for was an impulse entry retest play for a continuation to break this low. Didn't get that, took the L. Then what happened? Price retested this area here where what was the initial position that I was looking for it to retest. Then it rejected off of that. So then we took that entry. Like this. For that same continued move to the downside, looking for about a 1 to 2.8 risk to reward. Seen some type of volume, then broke my entry high, took my profits early because I risked a 0.5. You can see there, I took my profits early as price broke through my candle entry high, and it just so happened that it was an actual change of character. Price did not, in fact, respect off of this level. It pushed up, broke through that high, pushed down, and then created another high. It was in that bullish market structure. This was the change of character. Broke through that high, came back down to the retest level, and then pushed up. Essentially, if we were trading that move, you know, you see when price breaks through the high, you come back down to this low, and then you go ahead and take an entry from there, set your stops below the low, and then target back up to the high, because you do get that market structure shift from that level. That would ideally be the trade. But at that point, I had already lost my risk percentage on the day, took my 2 trades for that session, not even really looking at this. I wasn't even looking at the charts at this time. So yeah, so that was yesterday's trades, and so not bad, you know, not a bad. Well, it is, you know, not the ideal start to the week. Of course, we wanted to continue that hot streak of winning, but still a lot to be learned from. You know, a lot to take into account, and the markets are still moving. It's not like they've gone anywhere. We haven't missed out on every single move yet. Okay, so for EU, we are seeing that low get broken here. Remember, this is the low that I wanted to see get broken for me to be able to take my entry so that we could see this get an entry. What I want to see from here, which we might not get because there's so much volume, but what I would love to see from here is for a corrective structure to start now. We just broke out of that high. I want to see a corrective structure to start. Likely a retest. Well, my best entry would be a retest up to here. If we retest up to here, 110% I'm taking this trade. 110%, I'm going to take this trade from this level. If price retests up here, we get our rejection candle confirmation from there, and then look for a break of that low. I'm going to 110% take that trade. Because what would invalidate it? And I may set my stops depending on how the entry is, depending on how the rejection is. If we get a strong rejection off of this level, I'll set my stops above this high. If we get a weak rejection or something of that nature, I'll set my stops above this high. What would differentiate how the stops get set is if we get a strong, if we get a candle like this right here, that would be considered technically a weak candle for me. A strong reversal candle is something along the lines of like this candle here, where we start to get that bearish engulfing to happen. We get that push to the downside. If we get an bearish engulfing from this wave up here to come down, then it's likely that we'll have a less than desired entry and then set our stops above that high. But what we see happen is that we did get a break of this low, which means that since we do have this here, this is now invalidated, right? We got the double top, didn't break that high, rejected off of it. Then we came down and broke a low. So we broke this low. Now we just need to see a correction form, and we'll look for a potential continuation play. We have this 4-hour candle that I believe is just now in the process to flipping bearish. Yeah. So 4-hour candle is just now flipping bearish. Where do we want to see ultimately get broken? This level here. Why should we expect a correction and rejection off of that level? Is because we have a change of character that happens here. We got a high created, a low, a new high, broke the previous high, pushed back down, broke the low, and then it just started on this corrective structure. We now know that the corrective structure is done because we had a change of character that broke the previous corrective structure low's low. So now we wait for our correction to happen, our retest to our key zone. And it's likely that price won't make necessarily, just coming off of how much volume we have, it might not be likely that we see a steep correction. We could just have a shallow correction, a retest play, and a continuation down. So it's if then. Definitely if then. But this is what I wanted to see for us to be able to take a sell move. So if I'm not able to get this in this actual session, I'll send it to the free Telegram for everybody, and then Asian session for those of you in the VIP, well, I'll send out my analysis from there as well, because for Asian session we'll be coming off of FOMC, so I will update everybody after FOMC comes out. I highly suggest that you watch the press conference. I find it to be interesting to understand what it is. We generally don't see the spike from FOMC on the release of the news, rather than as the press conference begins to start, which is 30 minutes after the news release. That's generally when we start to see the volume kick into gear for those USD pairs, whether it be gold, EURUSD, the DXY, any USD pair that you're really looking at, looking to trade. Now it's 100. Excuse me. All of those pairs, that's what we look for there. But that's gonna wrap up this session. If there's if we do in fact get that move, I'll look for that continuation to the downside. If we don't, we'll just take it. Essentially, a no trade day is gonna be the best trade or the best day of the week so far. So not gonna force anything. Just want to wait for that pure candle confirmation for a continuation down. Going forward there. So yeah, so no trade for this actual live stream session, but keep an eye out. I will be trading. I won't be able to trade this account. I have another account that I've been trading. I literally just started this account this week because another firm that I work with, I'm having to fight for payouts, and the help the support team, they've not even responded to my messages at this point. And it's frustrating. So I wanted to work with a firm that is more reputable. It's an A-book firm. So when you pass these accounts, you do end up changing from a demo environment to an actual live 100K capital. So the gains are real gains. The trades get executed into the live markets. They're sent to the brokers. And you got same day withdrawals. You can't beat same day withdrawals, man. You get like not even same day withdrawals. You can withdraw as much as you want in the same day. You know, we know that we'll be looking at about one withdrawal a day. So after every, like when we pass this account, because yeah, we're down now, but we're not going to stay down. We're not going to stay. The markets aren't going to be ranging forever. You know what I'm saying? So once we start to get our trend going, we start to get the volume back into the markets, trading in our direction, we'll pass this account. And so what I'll do from there is, knock on wood, you feel me? I'm just confident that we can pass this account. So you know what I mean? It just is what it is. The system works, the strategy works, and we're gonna pass. We're gonna pass. So we're gonna do a withdrawal at the end of every session. So any profitable trade we have, we're in profit and liable for a withdrawal. We're gonna withdraw it live in the session so that you guys can see that there. And maybe if everything goes smoothly with this firm, I may reach out to him to form some type of partnership. But for right now, I'm not going to tell you guys who the firm is until I solidify that it is what it is, you know, because essentially that's what happened with the last firm I was working with that shall not be mentioned, because I'm not going to give any type of free publicity to that. But yeah, I appreciate everybody who tapped into the stream today. Hope you got some type of value in some way, shape, or form. Keep an eye out for this structure. Price could just push down right now to the very lows of these lows. That's why I said we're coming off of that volume that we have on that previous 30-minute candle, that it is not necessarily likely that we'll get a steep correction. Although I want a correction, it might just be that retest play and a continuation. And if that's the case, I'm not as inclined on trading that. But if we can see that it gives a, let's see here, is it going to give a decent risk to reward? If it gives a decent risk to reward, I may look at it at a reduced risk, maybe like a 0.25, not even a 0.5 at this point, being that price is so far gone coming off of all that volume. This looks similar to the market structure from our high volume trading strategy that we would have looked to trade it, or that we was looking to trade for we traded for NFP, but we also seen this same exact move for CPI last week. When you have high volume, you got to dial down to the lower time frame so that you can see the lower time frame structure, and then execute off of the first bearish candle following a correction. Generally, it's that 3 candle correction, just like how we see here. You see, you get a break of a low, broke the previous low. You get that 3 candle correction. This candle, 30-minute time frame, closes as an extremely strong bearish candle, and you just see that continuation as we're starting to see flow out here. So if it goes without me, it goes without me. If it breaks through this low and we start to see a correction from there, then we can still look to target whatever this current low is going to be going forward. So we break through this low, that solidifies that this still is in a bearish wave, because we just got our change of character, which was this low here that broke this previous low, which was the start of the break of the previous high. So we invalidated that price was going higher, and if it breaks this low, as it looks like it's doing right now, this solidifies that price is in fact still going down. This becomes our key high. We can still look for a correction back up there. It's likely it would just take a lot longer though. It's likely it wouldn't happen until probably Asian session, or when we got, well, anything with FOMC can happen, you know. So we could see that full spike up. It could be a spike up liquidity grab for FOMC, and then a continued drop to the downside. It can go either way. It's almost 50-50, but it's not 50-50 because it generally abides by structure. So I would expect some type of structure. Let's see, coming off of the previous daily, what did the previous daily do? The previous daily closed bullish. Okay, so the previous daily closed bullish. Either we're now going to see that this area gets rejected and we see a steep move to the downside, or we're just going to see this pop. And whatever direction it decides to go is what direction we'll look to trade following the volume. So this same thing, keep an eye out for it, because with this same high volume strategy that we just talked about just now is exactly what we're going to use for FOMC. So we're going to wait for the spike to spike in this direction. Hopefully we get a break of a key low or a key high, and then we wait for the correction, and we'll trade the continuation. You just take a trade something along the lines of this. After this candle, you'll set your stops above the high of that candle, looking to target whatever that targeted low is for a continuation of the volume. That's essentially how you trade volume. So Hope you got something out of this in some way, shape, or form. And I will see you guys tomorrow for tomorrow's session. Or actually, keep an eye out for the chat today because like I said, I'm gonna update you guys on FOMC, the news that we get released, what the numbers are, what it's looking like for the DXY. What does this mean going forward throughout the week? Because it's likely that FOMC, keep saying NFP, will give us the volume that we need to trade for the direction for the rest of the week, or at least for tomorrow's session, there. So appreciate you guys for tapping in, and I will catch you in tomorrow's session. Today was technically a better day than the best day we've had this week. So we're going to build on that positive momentum. Sometimes slow motion or no motion is, best. It's best. So I'll catch you guys tomorrow. All right.